Hello traders and welcome to another video review. Today is Thursday, June 1st, 2023. Let's take a look at the Forex calendar for today. As you know, this is the first Thursday of the week. Tomorrow is the first Friday of the week and first Friday of the month. So that means we are just one day ahead of the NFP payrolls data release, and you can tell by the ADP non-farm employment and initial jobless claims data scheduled for release at 2:15 and 2:30 respectively from the US. But let's go back to the beginning. Retail sales data from the Australia disappointed the market participants. The forecast was 0%, actual reading was 0%, last reading was 0.4%, so there is a decrease in retail sales in Australia. ISM Manufacturing PMI data from China beats the expectations of 50.3 with the actual number of 50.9, which is better than the last reading of 49.5. German manufacturing PMI data are scheduled for release 5 to 10, and the market participants expect a decrease from 45.5 to 42.9. Manufacturing PMI data from the UK are scheduled for release as well, this time at 10:30. Market participants again expect a drop from 47.8 to 46.9. CPI data from the European Union Eurozone are expected to be released at 11 o'clock. The CPI should stay at the same level of 7%. Then we have some kind of remarks from the ECB President Christine Lagarde at 11:30, and 2 hours later European Central Bank will publish the account of the last monetary policy meeting. ADP non-farm employment change, initial jobless claims, as we know, scheduled for release already 2:15 and 2:30. At 4 o'clock, we got scheduled for release ISM Manufacturing PMI data from the US, and the last very important data for today, crude oil inventories, are scheduled for release at 5 p.m. So, very intense day. Plenty of the important data had been released or are about to be released, so please stay focused, stay vigilant. Today we are going to start our technical part with euro-dollar analysis. 4-hour chart of the euro-dollar is showing us a bounce from the last low made at 1.0636, which is just below the 61% retracement of the last wave down. So let me just put a horizontal line on the very bottom of this movement. We got the tweezer bottom here, as you can see. Here we got the tweezer bottom, and we got something which is apparently called as a bullish engulfing. The price made a breakout above the 50 periods moving average on a 4-hour chart, which is okay, but since then there is no continuation above the high at 1.0706, which is the first technical intraday technical resistance for bulls, and of course there is one more located at 1.61. So that's the key technical resistance, and there is no breakout confirmation if there is no rally in the euro above this level. Of course, the next one would be the 100 periods moving average, 1.0795, and the market participants might await for the important data from the Eurozone and from the US to be published first in order to trigger some volatility on the euro and dollar related markets. So this is how it looks like on the euro dollar. Let's take a look at the market of gold. The gold market, as you can see, has retraced some territory from the last swing low. The swing low is located, let me just put a horizontal line on it. Swing low is located for now at 1931, so that's the swing low. Then we retrace something, but the market got rejected from the 100 periods moving average at 1974. Right now, after a short period of the consolidation, after a short period of some kind of inside bars here on the 4-hour chart, we have the development to the downside, and the intraday technical support is being right now very, very close. 1953 is the level that the God bears want first. Of course, please notice that the volatility will trigger after the European and especially US data release later on. Momentum hits the level of 60 and now turns back towards the level of 50, so the momentum is neutral. Any breakout below 1953 will likely cause the momentum to break to the downside, which will be a fuel for another down wave, and bulls will have again the control on the market. Overall trend since the spike towards 2080 is down, and there is no indication that this downtrend had been terminated or reversed. That was the gold market. Let's take a look at the S&P 500. The S&P 500 is going slowly but steadily to the upside. Since the low made on March 13, 2023, the market keeps making higher highs and higher lows. You can see this kind of a progression. Even recently, 2 days ago, on the end of the May, the market made kind of a local high and a swing high at the level of 4,236. Since then, we got some kind of a pullback. I think that the pullback was at least like a 50%. So let me just take a look. The last swing, the last wave to the upside, so the last upside swing, and we retraced. There you go, 50% of the last wave up. 4,171, this is the 50% retracement level, had been tested, and the level of 4,155 is the next target for bears. The market cannot right now break above the 50 periods moving average, 4,196. This will act as a local intraday technical resistance, and of course the support from the 100 periods moving average at 4,154 is still intact. Momentum just barely bounced above the level of 50 after this very, very sharp decline from the extremely overbought market conditions. So it looks like this market is highly technical. So all of the levels you have on the chart might work as a charm, unless the volatility will be bigger. It might be triggered by the data release later on. And last but not least, let's talk about Bitcoin. Again, we witnessed the downward movement. 26,605 was the low of the recent movement to the downside. Okay, so it looks like right now we broke below 50 and we broke below 61% Fibonacci retracement. So if we take into the consideration the last swing, okay, so you can see it clearly that the 61% is located here, basically at the level of 26,850, and this level was hit. Then there was a bounce, but the moving average put a lid on the bounce, and then it was pushed lower. New low, local low was made, 26,605. Now inside buy is in progress. Momentum is negative. Momentum looks like it is dominated by the bears, and if there is new low below the 26,605 low, it will obviously indicate a possible downward movement towards the technical support, very important technical support at 25,875. So there is no indication that this down move here might be terminated soon, and the bears are in charge of the market in the short term, despite the fact that we rally quite nicely last week on the Bitcoin. Right now the bears are still in charge of this market, and please take a look at the higher
time frame situation, this is still very slow downtrend, but you know, it's still a downtrend. Okay, we are still trying to do some kind of a distribution here between 26,000 and 31,000. This is distribution area, so we should expect that with a breakout below the 25,875 level, the market might spark a very, very sharp decline, way lower towards the 20,000 or even below. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.